Okay, good afternoon, everyone, and welcome to our training. We'll be looking at the EA building, more or less EA workshop creation without having to code. Now, some of you would know me. My name is Nana Obin Alexander. I am the head market analyst here at Anzo Capital, and trainer myself, right? I'm a trader myself. It's basically where I get most of my money from. Well, a lot, that's more about me. So let's jump straight into what we'll be looking at today. Now, so today's class, we won't be doing much EA coding itself. We'll be doing more about the important work that needs to be done before the coding. Now, I know lots of people want to just jump straight into, let's jump straight into the deep end. However, when it comes to creating robots or when it comes to developing, automating your strategy, it's actually very important that you do the groundwork first. You understand what you need to, what you're trying to accomplish. You need to simplify that process, and then begin by deploying or executing what you have detailed down in mind. So today we'll go through the first part where we would more or less see what exactly, just go a brief about what automation creation is all about, why it's important, how it is done, and then we'll look at the initial work that needs to be done to simplify your work so that you can have an EA that works how you intend it to work, right? And then in the next subsequent class, we would be looking at actually building a set out EA. So if you joined me at the seminar in Ibadan, I would be building that EA and optimizing it and trying to get it to work even better, okay? But today we'll break it down, explain what we're trying to do, detail out what we're trying to do and make it simpler or easier for us to then build the EA at the end. I would also be using today's class to also, play around the FX Streamer, which is the, web-based app that we're going to be using to build our content, okay? Now, trading robots are very important, and I'm sure we all know why. For those of us in the house, how many of us are currently trading? You could just signify by raising up your hand. Trading robots are, or EAs, however you like to call them, are actually quite important, especially now. A lot of the trading is being done in the global market are actually done by expert advisors, not high sophisticated AIs that trade the market. However, many of us are manual traders, and I love to trade manually myself because that's where the thrill comes from, and it's fun, it's interesting. I like to trade manually. However, I'm not a full manual trader. I am a hybrid trader, more like, meaning I trade manually mostly. However, I built several EAs. I've deployed several EAs that do some trading for me, and this is where the world is more or less going to when it comes to trading, where you can be part-time full. You can be a full, technical, however it is you want to trade / automation, right? The reason automation is important is because there are a couple of factors. The first one is being the fact that, well, as humans, we are filled up with emotions, right? How many times have you tried to take a trade? You've analyzed the markets, you've said, okay, you're going to place a trade if the market comes to a certain point. And then, let's say in coming down to that point, the market starts coming down with a very big aggressive candle. Let's say you're trying to buy and you place a buy limit, right? And let's say in getting to that point, the market, does that with a very big, bearish candle. And you start thinking, I'm not going to place this trade. It seems like this thing might blow past my level. And then maybe you don't execute the trade, and then come back later to your chart and you say that if you had executed the trade, well, you'd have been profitable. Or how many times have you taken a trade where your stop loss is supposed to be, you adjusted it and hoping that the market would rebound, and later on the market doesn't rebound? Why were you doing all of those tweaking? Why were you adjusting it? But the reason is because you were filled with emotion, the emotion of not wanting to lose, the emotion of this fear, greed, are two of the key emotions that affect traders. Now, when you build an automation or when you automate your strategy, I'm not a big fan of robots, right? So you wouldn't see me sell, sell robot and say, okay, this is a trading robot that trades for you and does all of that for you. I could give you suggestions. I would rather, sell or give you a management, but in terms of, okay, kind of preserve capital, but not in executing trades. The reason is that the whole idea behind trading robots is the fact that you want to automate your strategy. So your strategy that you've been using, that you've been testing, that have been working for you, you want to find a way to simplify it and put it in such a process that you can automate it. That is where the real power of automation comes from. So robots takes away this human emotion, this tendency from us, and then because it doesn't, there's no fear, there's no greed, it just simply follows the instructions and do what you've asked it to do. So very, very powerful indeed and very useful. Why, if you apply it very well, this could make you a lot of money. However, when it comes to robots creation, there's no holy grail. You're only as good as the robots that you develop or the robots that you buy. Now, when it comes to building your own bots, the most important thing is actually the strategy. It's not the bots, right? It's the strategy. You have to have a clear strategy that you want to automate. So let's say you've been trading in a particular way, or you've been backtesting a particular style, and you've seen how well or how it would have performed looking at it in hindsight, and you decide, okay, I want to automate the system such that I will be able to deploy this. I'll be able to allow this trade on execute this without even having to be in my chart. That is where the power of automation actually comes into place. Now, the strategy in itself is more like a cake. It's more like baking a cake, or making akara or making bread, however it is you want to look at it. You need a recipe, right? The strategy is the recipe, and then you need to follow it. Once you have a clear strategy or a clear recipe, then you've made the first step in developing a very good trading EA. Now, in terms of recipe, think about it this way. Let's take, for example, you want to make cake, or let me use akara, for example, because it's simple processes. To make akara, what do you need? Well, you need beans, so you get the beans. Also, let's assume. So for those of us who understand flow charts, we're going to kind of use a flow chart type of setting. So the first thing you want to do is maybe get the beans, and then you want to grind the beans, so you grind the beans. So the first step will be to get the beans. The second step will be to, blend it, to grind it together. And then the third step will be to maybe, add your ingredients, your salt, your pepper, crayfish, anything you want to add. That will be step 3. And then after step 3, you go to step 4. And then what will be step 4? Put it inside boiling oil, or however it is you want to do. And then after you put it inside the boiling oil, maybe you wait for 5 minutes, and then you bring it down, and your akara, your bean cake, is ready to be served. That is the process for making a bean cake or akara, however it is you want to do. If it's cake, if it's a normal cake, or you want to make bread, there are still recipes that you need to follow instruction. 1, after 1, you do 2, after 2, you do 3, after 3, you do 4. Imagine you're trying to make akara, and then you decide to, you get the beans, you've not selected it, and you've not blended it, and you decide, okay, you want to fry it inside hot oil. You're jumping from step 1 to step 4. You're not going to have a very nice akara. You get the whole idea. It's about having defined system. You have a strategy that you want to automate, lay down the rules for automating that strategy, and then proceed to executing that automation, right? So that is what I mean when what I'm referring to when I say it's all about strategy or a clear recipe, and then following that strategy. Now, so this is where it all comes into place. This whole trading module, or this training course that you're getting from me or from Anzo Capital, is all about helping you to develop your own trading robots. It's not selling any particular robot to you. So if you have a strategy that works, or you're trying to backtest strategy or something, you can then, simplify it, build an EA around it, and then deploy it and see how it goes. Okay, so that is, the first important step. You want to have a clear strategy, and then you want to follow your recipe or your strategy to it. Now, what do you need to go through this course with me, or this process with me? Well, in order to participate with me in this whole training course, well, first of all, you need Anzo Capital. You need to have an account with Anzo Capital. Actually, besides this particular module, besides this training today, you'd actually need to have funded your account to enjoy, much more intense and advanced training course with me as well, not just on building robots, but in actual trading. Some of you who have funded your account, you know that you get the opportunity to join me in my trading room. We look for opportunities in the market, look to execute trades together. We had one this morning, and that you could always be part of them. And then also, definitely, you would also be able to join me on classes where we'll be looking at building robots, modifying those EAs, and optimizing them for better results. Okay, so why you need Anzo Capital as the first important point, right? You need your funded account. You also will be using the FX Dreamer web-based software to build our EA. The reason we're using FX Dreamer is because, well, this will allow us to build our EAs without having to code our EAs directly. Now, before now, I used to build my EAs, hard coding using the MQL language. So the MQL is the what do you call it, programming language to build this. But not everybody are computer science student, or not everybody understand programming. And so with FX Dreamer, you're able to do so without having to code, without having to write complex code and algorithm and all of those things. So you can simply do it by drag and dropping. And I will show you exactly how to do that. Actually, a little bit more intense than that, more, but it's just much easier than having to hard code it yourself. Now, obviously, you need to get the software. It's not that expensive. You need to get software to build really good, sophisticated EAs, but we can proceed as well. Now, here is where we'll spend most of our time in the process, right? The process when it comes to developing an EA. Now, when it comes to developing an EA, the trade logic, as I like to put it, is very, very important, right? It's extremely important if you're going to get the result you want. Now, the result we are all looking for is profitable trading bots, right? We're trying to, now, the assumption here is that, you have a system or a strategy that you want to automate, right? So you have a strategy you're trying to automate, and that is the assumption. Now, in that case, defining that the logic about your trading is extremely important. It's really, really important, because it has to be clear and it has to be simple if you're going to be able to, put it in a form, in a trading system that your bot can understand, right? So you don't want to have, your rules has to be simplified. You have to be able to, let's say, teach it to a 3-year-old in terms of, if this happened, then this, if this happened, I do this. Why do I buy? What are the things that trigger my buying decisions? And what are the things that trigger my selling decisions? And that is what step 1 should be. So the goal should be to break down our reason for our strategy. So the first step is, why am I buying, or why am I selling? So if I'm looking at a trade, I'm sure all of us traders here, we all have some sort of systems that we trade. At least I hope that we do. If you don't have a trading system or a trading strategy, then you really, really need to be in my exclusive classes. Okay, but that being aside, you want to have a system that you trade as to why you buy or why you sell. Now, let's assume that I'm going to use just a basic pin bar trading strategy, right? So let's say candlestick, price action candlestick. Now, let's say your system, your own trading rule is that, well, I would draw my levels of support, draw my levels of resistance, and then I would watch for those levels of support or resistance, looking for price action candlesticks. So let's say you have a set of 4 or 5 or 3 candlesticks formations that you only watch for, maybe pin bar, engulfing bar, and maybe something else, right? So your reason for buying or selling would be, so for buying would be that, well, price is approaching the level of support, right? So if you're buying, well, your reason for buying would be, let's say you're looking at, okay, well, price is approaching a level of support. So let's say it's a level of support and price is coming down to 8. And then you see let's say a bullish pin bar, that would be your reason for buying, right? So that is what I mean by the first step. Now, every single trading strategy differs in their reason for buying. So people use indicators as indicators as a reason for executing a trade. Maybe market is overbought, price is oversold, the MACD is at a particular place. All of those fancy things, those are your reasons for executing the trade. So you want to define the reason for executing your trade, and then define it clearly such that you're saying, okay, if this happened, then you now proceed to step 2, which is to execute the trade. So you have to define your buying logic, the logic behind your buying action, and then the logic behind your selling action. So you have to define it clearly such that we can then impute it or code it into our bots to execute those trades if those criteria are met. Now, once those criteria are met, you now need to decide, how do you enter? So let's go back to our example here. If we're using the pin bar strategy, let's say this is a pin bar from level of support and we're deciding to buy. Now, if you're deciding to buy based on that, you have to decide, how do I enter the trade? Do I enter at the close of this candle? Do I wait for the candle? Let's say after the close of the candle, wait for the 50% retracement of the pin bar, or do you wait for a retest? All of those criteria behind how you enter the trade now comes in at step 2. which is how do you enter the trade based on your system. And once you've defined that, you now need to decide, okay, so how do I exit the trade? There are two forms of exit. There's the exit for profit, there's the exit for loss, right? So if you're wrong, how do you exit the trade if the market is going against you? And if you're right, well, how do you exit the trade and close for profit? Now, based on this system, you may be looking at, okay, well, if the setup is right, if my entry criteria are met, so 1 and 2 is in check, and then you have the third criteria, which is how do I exit? Firstly, how do I exit if I'm wrong? Let's assume that, well, you're trying to, your what do you call it? Your exit is based on, let's say, a few pips below the low of the candle. That is how you exit for loss. And let's say your take profits might be, maybe you might use risk to reward ratio, you might use the next level of resistance. However it is that you do that is what you would define in your logic. And then, so you have your reason for entering the trade, your PIN bar, you have your how you enter the trade, let's say at the close of the candle, or, retracement into, retest of the previous level. And then how you exit the trade, how you exit it for stop loss, and how you exit it for take profits. And you have 1, 2, 3 in check. And then the fourth one, which, that one is optionary in terms of how do you manage the trade. This is where you now have to do things like trailing stops. You don't have to do things like, moving trades to break even and all. But this is the whole action behind, okay, the process that what you have to do first before even going into developing or automating your systems, okay? So far so good. I hope we're following. I hope we're following and we're being carried along. I hope what I'm saying is not too out of the ordinary, right? I hope, just give me quick feedbacks with your yes or thumbs up. Let me know that a majority of the people are following along with me. Okay, okay, good. Now, sorry. Now, let's proceed. Okay, so on to the next slide. Now we've understood the initials. We looked at, what you need. We also looked at how it's done, the process involved, and then we've looked at the actual process. So what we're going to do now is we're going to begin the process of making a simple trading strategy, right? So we're going to begin the process of making a moving average crossover strategy. Now I'm going to explain the strategy. And then we're going to now detail what we are trying to accomplish. And before we'll round up by going to the FX Dreamer and just playing around a little bit, and then we'll call it a wrap for this section. Okay, so now the moving average trading strategy that we're trying to deploy here requires, so we're looking at, okay, I'm sure everybody here knows what a moving average is. So if price is moving like this, if we have a moving average, it's probably moving, following price, just below price. And then in a bearish market, you find that the moving average would, go slightly above price. So this is the whole basics, the whole bias, right? We're trying to automate, create a trading strategy by combining two moving averages together. So the two moving averages will be combining together. One of them is going to be slow, one of them is going to be fast. The slow moving average, let's just call it slow. So the slow moving average we'll use a period of 5, and the fast moving average, we used a period of 12. Right, so we're going to use the slow and the fast EMA, and the moving average. There are different types of moving average. The moving average we'll be using in this case would be, so the MA that we'll be using would be the exponential moving average. There's the simple moving average, there's the smooth, there's the linear weighted, but what we're going to be using is the exponential moving average. So see how we've understood what we're trying to do, right? We're going to combine two EMAs, right? The slow and the fast, and we know that they will just be moving within themselves, something like this. And so the slow one would be the one that is closer to price, and the fast one would be the one that is farther from price. And the moving average we're going to be using is the exponential. Now, the basic idea is this, because we've noticed that, well, in a bullish market, that means where price is making higher lows and higher lows and higher highs and higher lows and higher highs, the moving average tends to be below price, right? I mean, when price is moving in an uptrend or making higher lows and higher highs, we tend to see that the moving average stays below price. And then when price breaks, right, where price now starts moving in a downtrend, the moving average now tends to be moving above price. But what we notice is that somewhere there's an interjunction where the slow moving average or the previous slow moving average crosses the other moving average. That means the 5-period moving average crosses below the 12-period moving average or above, or vice versa. So this period, that point of interjunction there is where we now is where we now use as a reason for executing our trade, right? I don't know, are you guys following me? Now, I'm sure we've all seen this. We've all seen simple trading strategies, forgive me, around this sort of thing. However, why it can be powerful, one of the main reasons it fails is because, well, we don't follow it judiciously, right? Now, with this system, what we're trying to do is, I don't want to have to be waiting on my charts to see when this cross happened. I want to build, so instead of sitting down and just waiting on my chart to see this crossover here happen, I want to just build a system that would just watch the chart, and immediately this cross happen, would make a decision on my behalf, right? Would execute trading decision on my behalf, and then I look to proceed. Now, so that's being done, and that being said, that is what we are trying to accomplish. Now, that is, if you look at what I just drew now, and let's go back to our process screen. Don't worry about the gibberish. The first step is that we want to understand the reason why we are buying or why we are selling, right? And if we go back to the previous slide, we are looking to, buy, right? Sorry, we're looking to buy when the slow moving average crosses. So let's say, let me not stop using slow. You can see 5-period here. So when the slow moving average crosses above the fast moving average, we're looking to buy, right? And then when the slow moving average crosses below the fast moving average, we're looking to sell. That is our reason for buying or selling. So we have done step 1, right? The second one would be, how do you enter the trade? Well, we go back to our slide. So we want to enter the trade at the close of the candle, right? We don't want to enter when it seems like it's going to cross. The candle that closed, the candle where it suggested this close, is where we want to enter. So at the close of that candle, where they both cross over, is where we want to enter our trade. We've defined our step 2. How do we enter the trade? And the step 3 is, how do we exit the trade? How do we exit for stop, for profits? And how do we exit for when we're wrong? Well, in these particular systems, we're going to use, there are a number of ways to play around it. I will show you guys how to set hacks. You could just set, okay, stop loss 10 pips, take profit 20 pips. I'll also show you how you can more or less refine it by using no stop loss in this case. In this case, no stop loss doesn't mean there's no stop loss. It means we're going to use a dynamic stop loss, right? Instead of using hard-coded stop loss, we use a dynamic stop loss that would also be based on the moving average. And our take profits would also be based on the moving average, okay? And then we would optimize this strategy in the next video, I would actually build the EA together. And then in the upper one, we would optimize the EA together to then, avoid, filter out bad trades, and help you spot, jump into less terrible trades so that you can get better trades and make more profit. Now, toward the end, I would make the EA available for everyone. Now, I'm not giving you EA to trade. Remember, this is just a very simple EA. You can go and play around it, maybe for educational purposes. You can test it if you like in your demo, but it's your decision, right? That will be at the end and at the 5th video, at the 5th training video or something like that, okay? Now, let's jump straight into what I like to do, right? I'm a very, at least I like to think I am a very detailed person, right? So I like to make things clear, and we're going to do the same thing for our EA here now. Okay, so join me. Let's go straight over to a Word document, which we will be creating together to automate our system. Now, at this point, I hope we are at least enjoying the training. If you have questions, please type them in the chat box. I'll come back to them. Okay. Okay. So now we're going to create our document. For our EA. What would we call this? Let's call this Anzo. So let's call it Anzo EA. Moving average strategy. Yeah, that's what we're going to call it, part 1. Okay, so that is what it is. This is something I like to do because this way I can always come back to my drawing board. So this is more like my drawing board. Come back to the drawing board, tweak, because it's very, very rarely that you're going to build the perfect EA at first. Many times it will require multiple iterations, multiple testings. So if everything is done haphazard, it's quite difficult for me to come back and solve the problem. But if I have detailed rules as to what I'm looking at, it's quite easy for me to just come and okay, edit something, fix something, adjust some parameters. Okay, so what we're going to do first is we're going to so let's just call this EMA strategy. Okay, so first thing we want to do is, what do we need for this particular strategy? What is the things, or what are the things that we need for our strategy? Well, since we're doing the moving average, what we need actually, one of the first, probably the most important thing for the strategy is actually, well, the moving average. So we're going to begin by what's the easiest way to do this? Required indicators. So let's just call it so required indicators, right? Small letter. Okay, now what do we need? Well, we need 2 things, two EAs, right? The first one will be the exponential moving average. The period will be 5. And then the second one would also be the EMA with a period of, what did we call it? I think it was 12 this time. Now, so those are the 2 EAs that we need, the 2 indicators that we need for this system. Now, what are we trying to accomplish, right? First thing is, what time frame? Now, this one is subject to flexibility. When you're testing or back testing, you can play around the time frame you want to deploy it on. You see the one that has the most success, but I like to just have it first here in terms of time frames, right? So time frames. Let's just keep this gap. Make this bold. So required EA, let's make that bold. Time frame, let's make that bold as well. Now, we will come back to this one eventually because we don't know what time frame would be best, but usually I'm going to want to do this on the, let's say, 1 hour time frame, right? And then the next point to be, okay, so what is the execution logic? What is the trade execution logic? Now, these words are just my own, what I call it, terms. However, it's just something to help me understand what I'm trying to do. Now, what are we trying to accomplish here is, well, we're trying to do one of 2 things. We're looking for buys and sells. The EA is supposed to look for buy opportunity, is supposed to look for sell opportunity. Now, in the scenario, in a buying scenario where the market is looking for buying opportunity, we'll just call this capital buy. What are the rules that the EA needs to look for to execute this logic? Well, if we go back to, so I'm going to just, let me pull up. Okay, so now, basically what we're trying to accomplish is we're looking for buy opportunity when the 5-period moving average crosses above the 12-period moving average. So simple, you can just put it like that. So what we're going to, the EA is going to look for buys when, so we're going to make this easy for us, we'll refer to the 5-period moving average, we'll refer to it as as fast, and then we'll refer to the 12-period moving average as, no, not there, as slow. So that whenever you hear me say slow, you know I'm referring to the 12-period. Whenever you hear me say fast, I'm referring to the 5-period moving average. So when the slow moving average, right, we're looking for buys, when the slow moving average crosses below the fast moving average, right? So when, let's just say when the fast EMA crosses above the slow EMA, we look for buys, right? So when the slow crosses below, now this is a very simple, the logic is not complex, so it won't require so much, won't require so much instruction. For those of you who understand flow charts, those guys who understand some computer science a little bit, flow charts, you start from execute the stats to decision making, to processes that would lead to decision making. That's actually the same thing we're trying to do here. So we're saying we're looking for buys when the slow EMA crosses above the when the fast EMA crosses above the slow EMA, we look to execute a buy. And then the second would be in the case of a sell. So when we're looking for sell, this is going to be sell instead, would be when the fast EMA crosses below. So the difference here is it will look to sell, or it will look to buy when the fast EMA crosses above, and then it will look to sell when the fast EMA crosses below the slow in the same instrument. Now, very simple. Actually, trading is actually very simple. At least the way I look at it, my trading style is actually quite extremely simple. Most of the time, what I find is when you overcomplicate things, you just run into analysis paralysis, right? Now, obviously, this one is probably quite too simple, maybe, but basically, we're looking to buy when the fast EMA crosses above, and we're looking to sell when the fast EMA crosses below the slow. Now, we've decided on how we enter the trade. Now, how do we exit the trade, right? So the first step is how do we enter the trade? How do we exit the trade? Now, in this particular instance, it's quite flexible, up to you. You can include your stop loss and take profit parameters in between each logic statement. Now, and then you can also do it lower. So we can just say stop loss, and also our take profit, which will be TP and SL. So what is your stop loss parameter in the case of the buy, and what is your stop loss parameter in the case of the sell? Now, some people can say, okay, well, let's say I'm using the 15-minute time frame or 30 minutes time frame. The stop loss could be what? 10 pips away from your entry, or maybe, and then your targets could be 20 pips away from your entry. Now that's one way of doing it. You could also use the envelope or something else. You could add another indicator and make it a little bit complicated, but that's a different notion entirely. But what we're going to do here is we're going to keep it simple, right? Not too simple. The simplest way would just be to put hard code stop loss. So the simplest way would just be to, just have this included here, where our TP and SL will just have hardcore value attached to them. However, what we're going to do instead is our stop loss and TP will be flexible, right? So let me draw on my screen. Now, if price is moving like this in an uptrend, right? And let's say the price was coming from a previous downtrend. Now, if you had, and let's say we had the 5-period moving average. In this case, let me make the 5-period moving average yellow, right? So the yellow EMA will be moving something like this with price, right? And then the red period moving average, which will be the 12 or the slow one, will be moving a little bit further than that from price. So it's moving like this. And my drawing will not be perfect. However, there will be some points before price changes, before the market changes direction, right? You would see that the, what do you call it, the yellow line, which was below before, will start going above, and somewhere, the red line will cross the yellow line and go below, right? So this point here, where the red line crosses the yellow line, right? In this case, the yellow line is our fast and the red line is our slow. This point here, where the yellow line crosses above the red one, is where we are looking to execute that decision. So this is where we buy, right? So we buy here and we stay in this. But now, if we were to use a hard code stop loss, so that means we're just to impute. So we can just put stop loss 10 pips below, put take profit 20 pips above, right? Now that's one way of doing it. But for this particular EA that we're doing, I'm not going to do that. What I'm going to do instead would be, this trade is going to be open. It's going to stay open as long as, so if the market is moving our way, well, this red line would continue to stay lower than the yellow line, right? So let's see the red line continues to do this. The yellow line would be doing something, so something like this, right? So the trade will stay open as long as these two EMAs are, so the yellow one or the fast one is still above the red one. Now, what you know is, well, nothing goes up forever. At some point, maybe we have a ranging market and we have a breakdown, right? What will happen is, well, the red EMA would then catch up with the yellow one. So the yellow one would now start coming like this, and then the red one or will start doing something like this, right? Now, what do you note? At this point here, where they both cross over, is going to be two things for us. First of all, it's going to be where the sell trade is executed. However, if we had a buy trade here, this is where the buy trade would be closed for profit, right? So even if it was not for profits or for loss, that is where it will close. Where the so in this case, where the red one goes above the yellow one, it will close for profit, and then that will be also the trigger for the trade to start selling, and then the market will still be looking for sales, and price would be let's say price starts doing this, coming down. Well, this EMA will be following this one as well, and they'll keep doing that until the market were to break out and they change over, and that would be where they cross themselves, and that will be where a buy will be triggered. The sell that was taken here will be closed at that point. So the trade will just be will be ongoing. You can also set parameters as to how many trades. You can say, okay, after 10 trades, close for the day. Don't execute any trade after the 10th trade for the day. These are some of the flexibilities you can do, but that will be when you're optimizing your strategy, so that that will be entirely up to you, right? So basically, we've understood this trading system that we have. We've understood what we are trying to accomplish. We understand how it works, and now all that is left is just to take all of these instructions and then impute it into our EA, whatever, our FX Dreamer EA, right? And then we're good to go. And then we can have an EA that we can all deploy and test and play around and back test. Okay. So this is how far we'll be covering for this section of the training. On Friday, I should be having another training, which will be the next to this one, where we'll now actually build this EA. So we're going to build this EA together, myself and you. We're going to build this EA together from scratch, and then we would have the final product, which after that next video, we would optimize it to even make us better profit or better returns. Okay, so that will be where I draw the curtain for our class today. I hope you guys enjoyed it, and that will be where I take your questions. So I'm going to clear all of this. Okay, Wally says, are you saying that the EA will close once the EMA crosses each other without any specific instruction to that? Yes, that's what we're trying to accomplish here. So that is going to be the close. So it's going to trigger the entry where they cross over, and then it's going to close it where they also cross over. But that close would also be the signal for the opposite trade. So let's say it was buying here because they crossed over this way. It will close that buy because of that crossover, and then open a sell here, and the process will be on and on and on. We can also set in, let it take a number of trades, and after that number of trades, you should close. You shouldn't execute any further trade. Those are some of the things that we can also do around it. Yeah, question. Ibrahim, you could type in your question. Stella says, can bots be used to automate trading strategies or methods that doesn't involve indicators? Yeah, if you can, you can automate your strategy that doesn't involve indicator, but you have to be able to define that system. You have to be able to define the strategy in a very simple form, right? It's not just about drawing lines or anything. You need to define the system to a very, very, very simple way, and then it can be built, right? However, there are some really complex systems that in order to actually automate them, you probably will not be able to use FX Streamer. You probably need a programmer to help develop them, for you. But yes, you can automate your systems. You can build your own custom indicators, right? You can combine a number of indicators together. You can build your own custom parameters, maybe looking for candlestick setups. As long as you can define those parameters very clearly, you can build an EA for it. Okay, I've answered your question. Yeah, any other question? While we're here, I hope we did enjoy the training. I hope we enjoyed, I know we've not actually started doing anything fancy, but I hope you enjoyed the class, this session today. Okay.
Hello, sir.
Yes, go ahead. Recording. Okay, so remember also there will be a follow-up class on this. Should be on Friday, where we'll be looking at part 2, where we'll actually build this EA, and would keep taking it a step further. However, well, this is the bonus session. To get access to the other classes, actually, you should have already created your account, which is the more or less criteria to get access to this particular training. To get access to the other classes and my entire exclusive trainings and trading room, well, you need to actually fund your account, because, well, trainings are free, everything's are free. Anzo is providing you these things for free. All they require is, well, you trade on the platform. That's just it. All you just need to do is create your account. If you haven't, fund your account to the minimum of $100. And then you can get access to these trainings. There are more contents, actually more in-depth. I'll be building over time. I will be building or developing with you together some very, very sophisticated EAs. So you don't want to miss out on those ones as well. That will be over time, obviously. And then besides the EA, besides EA creation, which actually is not really which in my own opinion is not the main cost. The main cost is actually having the opportunity to join me in my trading rooms and look out for trade opportunities every Tuesdays and Wednesdays and look to kill the markets. Then you definitely want to be on board, okay? And there are lots more other things that you can get as well. Yeah, you can get my number from my contacts from Mr. Precious, is my colleague. If you have the Who's that? Okay, so yes, you can get my contacts from Mr. Precious. What's the minimum to fund the account? $100, so that's about 50,000 naira. The minimum is $100. That's about 50,000 naira. I think I'm going to pause the record, stop the recording now. So, so remember, please, while the link is on the YouTube channel. To the YouTube channel is posted here. You can always go and rewatch it. And while you're there, like, subscribe, and share. Okay, now I hope you guys enjoy. I hope we all enjoyed the training today.